Once again, a very warm welcome to each of you. Those who are seated and in the hall, a humble request to kindly put your mobile phones in silent mode or vibrating mode. Your esteemed guests, industry leaders, ladies and gentlemen, and those who have joined us virtually, we also welcome all of you. Welcome to the inaugural session of the Global Securities Market Conclave 1.0, hosted at Gift City, Gujarat, which is India's premier international financial services center. Today marks the beginning of a significant journey to explore the theme, building an innovative and sustainable securities market ecosystem in GIFT IFSC. Over the next 2 days, today and tomorrow, we will hear from thought leaders, experts, and policymakers about the transformative trends shaping global securities markets and GIFT IFSC's critical role in driving this change. GSMC, organized by the IFSCA in association with the leading market infrastructure institutions in the IFSC, NSE International Exchange, India International Exchange, NSE International Clearing Corporation, India International Clearing Corporation, India International Depository, and India International Bullion Exchange. Together, these institutions are building a robust and sustainable securities market ecosystem in Gift City. So, ladies and gentlemen, we encourage you to follow us on our GSMC social media handles to stay updated on the latest from this conclave and beyond. Don't forget to tag yourself and share your experience using our event hashtag GSMC 2025. Also, make sure to visit the organizers' stalls outside the conference hall to explore diverse capital market offerings and discover how the world connects with the GIFT IFSC ecosystem. So with that, we request everyone to kindly rise up for the national anthem.
Sindh, Gujarat, Maratha, Himachal, Ganga, Jala, Tava Shubha Name Jage, Shubha Ashish Mage, Ahe Tava Jaya Gatha. Mangaladayaka Jaya He Bharat Bhagya Vidhata Jaya 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 He
Bharat Mata Ki. It's just a morning, guys. Bharat Mata Ki. Dhanyavad. Let us now proceed with the ceremonial lighting of the lamp to commemorate the inaugural edition of the Global Securities Market Conclave 1.0. We are honored to welcome Mr. K. Rajaraman, Chairperson of IFSCA. Welcome, sir. Mr. V. Balasubramaniam, MD and CEO of NSE International Exchange. Welcome, sir. Mr. Vijay Krishnamurthy, MD and CEO of Indian International Exchange. Welcome, sir. Mr. Ashok Gautam, MD and CEO, India International Bullion Exchange, IFSC Limited, and Mr. Kaushal Sampath, MD and CEO of India International Depository, IFSCA Limited, to light the lamp. Please, you can move forward. All the gentlemen, we request you to join us for the lamp lighting ceremony. Thank you very much. We pray to Almighty for the well-being of all the living beings on the earth. In order to begin our today's conclave and give away the welcome address, please help me welcome Mr. Pradeep Ramakrishnan, Executive Director, Department of Capital Markets, Department of Metals and Commodities, IFSCA. Welcome, sir.
Morning, everyone. Good morning for all of you. So we all woke up to the news of a ceasefire, in a part of the world which has been concerning all of us. So it's actually been a good morning. So we really hope in the next few weeks the other war, which is also ravaging in another part of the world, also stops, so that we can all get back to business. Like our Prime Minister always says, this is not the era for war, right? This is the era for doing business. It's my pleasure and honor, privilege actually, be on this standing near this podium and welcoming you all. I'll take this privilege of first welcoming our chairperson, K. Rajaraman, and shortly we'll also be joined virtually by our Chief Economic Advisor, Sri Anantha Nageswaran. So I take this opportunity to welcome him also. Before I start next, I would also take this opportunity to thank our chairperson, because he gave us a complete canvas to paint whatever we wanted. That is why we have had this program with all the participants from around the world. I would like to also take this opportunity to welcome all the speakers and the panelists, particularly people who have taken the pains to come from around the world, because especially today is a day when our conferences clashed with another major conference that is happening in Mumbai, where SEBI is organizing a conference. So otherwise, I'm sure this room would be even more full. And I would like to also welcome all the audience who have come in person. And also, we are streaming this program live on YouTube. So we expect a lot of people to take advantage of this. In fact, we had to say no to a lot of people. Initially, when we opened the registration, we did not expect it such a mammoth response. Within 1.5 days, we had almost 500 registrations for 200 odd seats. So we had to send letters of regret. So we are streaming this program live on YouTube also for everyone. So this program is also so both physical and virtual audience. Welcome you all. So I hope the next 2 days we are going to have programs on various themes, right from the securities market, the bullion markets, sustainable finance, on funds. So a lot of things to look forward to. I'm sure all of us will always be benefited by learning, because like the Rig Veda says, noble thoughts should come from all sides. And there is no stage to stop learning. Recently, we saw the famous cricket series that world famous test batsman still is learning how to play outside the off stump. So there is no state as to when you should stop learning. So thank you so much for coming, and welcome you all.
Thank you very much, sir, for your warm welcome words and also for setting the tone of this important conclave. We would now like to invite Mr. K. Rajaraman, Chairperson of IFSCA, to give the keynote address. Shri K. Rajaraman belongs to the 1989 batch of Indian Administrative Service and has served for nearly 35 years in various leadership roles in Government of India and Government of Tamil Nadu. Prior to joining IFSCA, he served as the Secretary to Government of India in the Department of Telecommunications. So please extend a warm welcome to Mr. K. Rajaraman. Please welcome, sir.
Warm welcome to all of you, ladies and gentlemen. I'd like to send my hearty congratulations to the organizing team of this full Capital Market Summit. Has been needed for a long time, I think. So IFSCA has been in the making for the last 10 years, and it is absolutely essential for this jurisdiction to regularly put out information as to what's new and what's cooking and developing in this financial center. So it's a good step forward that the market infrastructure institutions have joined together to organize this conclave. So I only wish this conclave all success and also hope that grows from strength to strength in the coming years. So as Pradeep said, I think very important for us to keep the eyes and ears open, keep the ears to the ground, and understand what is happening in the rest of the world and what is happening within the country, and to understand the context in which you're working and constantly recalibrate what needs to be done to ensure that we are always in the right direction, I think, or in the best or in the optimal direction, which aids, supports, and facilitates the growth of India. So if you look at the history of the International Financial Services Center, I think though the thought process started sometime in 2007, the effective regulation of this as a financial center started in 2014 when regulators were asked to come together, and the domestic regulators were asked to come together and issue enabling notification. Since then, 2019, I think the government decided to set up a separate legal jurisdiction, the auspices of a law, the International Financial Services Centers Authority Act of 2019, which delegated powers under the various financial sector laws to an authority called the IFSCA authority to regulate this different market. So this is, in a sense, a very different architecture, because in many other parts of the world, like say Labuan in Malaysia or Dubai in International Financial Center, architectures have been different. I think Dubai, for instance, there is a separate governing law, whereas we in GIFT City, the IFSC work under the Constitution of India, and the model is to make carve-outs in the current domestic laws. So by that measure, we have a full carve-out for FEMA, I think, which means that the normal controls that apply within India do not apply. I think capital controls do not apply in GIFT City. Further, it is a completely non-rupee territory. I think that's how it has been defined. So therefore, and in addition to that, there are a number of carve-outs under various laws, including Companies Act, the various financial sector laws, the Income Tax Act, and so on and so forth. So as a consequence of the way in which we have architected GIFT City, it has taken time for us to actually get to where we are now. So today we have a fairly good regulatory architecture. We have a fairly good tax regime. This is improving by the day, and we are trying to constantly ensure that I think we do the best possible thing to align ourselves completely with the rest of the world. Interference. So initially, I think the thinking of the international financial sector started with the concept of onshoring what is offshore. I think so. This many of you must have, who are part of GIFT City must have heard this. So where businesses which are India focused outside the country were attracted back to the country by providing an equivalent regime, I think, which is fairly attractive. So the proof of the concept has been tested. And today there are a number of alternate investment funds which have relocated to GIFT City. There are ship leasing and aircraft leasing companies which have come here. So there are many businesses which were which were located in many parts of the world which have come back and are in the process of coming back. So while that was the initial vision that we can call, the focus has changed to what we can do to support India's growth story. I think so. The government of India and the Honorable Prime Minister have now vocalized the idea of Viksit Bharat at 2047, which is a challenging task, but nevertheless something which needs to be done by all the stakeholders in economic growth story of India. Includes government, industry, academic institutions, and market participants, and so on and so forth. So therefore, this concept of Viksit Bharat requires us to do several things. There have been several books which have been written on this. I think there have been various stakeholders who have actually sliced and diced their own sectors for this purpose, and so on and so forth. So if I may, in a very summarized form, say what requires us to get there, I think, because we have done a lot of things right. In the last, say, 30 years, I think liberalization has been the agenda. I think in various doses, in an incremental fashion. But as time passed by, it was realized that there are deeper reforms that are required. So the last 10 years have been very exciting from that perspective. Deep structural reforms have been done in a variety of verticals. Like for instance, the introduction of the GST Act, this kind of unifying India from a consumption tax perspective. The IBC code, which actually ensures greater corporate discipline. I think IBC code combined with the asset classification and provisioning norms of the central bank have all ensure, and also recapitalization of the various banks, consolidation of public sector banks and insurance companies. All these have led to of financial sector institutions which are far more disciplined, far more healthier, and today I think they form the foundation of the growth that can come forward, I think, in the future. So the health of the financial sector institutions has been the agenda for the last 10 years. The stock market reforms in the domestic area have also helped immensely. I think today the number of demat accounts has multiplied several fold. The participation in the retail segment of the market has multiplied several fold. The participation of foreign investors through various means have also multiplied several fold. So the overall confidence in the Indian market on the various reforms that have been done have been resounding. I mean, it could be much better, but definitely it has been heartwarming. The proof of the pudding again is, if I may look at the foreign direct investment numbers, I think for the last couple of years, financial years, it has been around $70 billion in the gross inflows. So this definitely will go up, I think, as we continue to reform. Now, looking forward, what do we need to become? Because as part of the capital markets, we have a very important function to play. So it is very important to understand the direction of India's economic growth. I'm sure that our my colleague, Mr. former colleague, Mr. Anantha Nageswaran, the Chief Economic Advisor of the Government of India, will certainly give his views. It is my duty also to kind of the overall context in which we are working. The 2047 agenda will require several pillars to be strengthened or built. In the first pillar, obviously, being more reforms. I think the reforms that we have done is not enough. We have to actually look for more transformational reforms. In which, if you do reforms in a business as usual manner, then the results also are likely to be business as usual or incremental, for that matter. So what we need to look at transformative reforms. I think transformative reforms will come through very important fundamental changes. I think that includes the legal reforms. So the Government of India is now, the last budget, Honorable Finance Minister announced the simplification of the tax acts, both the Income Tax Act, the GST Act, etc. So this is a very important piece of work. Every ministry is now involved in actually replacing colonial era laws with new laws which are business friendly and forward looking. And many departments have already done it. In my last assignment as Telecom Secretary, I had the job of rewriting or drafting the telecom law, I think. So we were governed by the Telegraph Act of 1885. So today, thanks to the work done by the government, we have a Telecom Act of 2023 in position. So every ministry is doing that. So this task will go on for the next 4 to 5 years. It is work in progress. So once that is done, I think we will have a fairly good legal architecture. We may also have to do a lot of things like judicial reforms in dispute resolution and so on and so forth to ensure that the attractiveness of India as a destination actually multiplies several fold. So the time is now for the structural reforms, all these fundamental reforms which will actually lay the foundation for the growth over the next 20 to 23 years. If I may say what the pillars of these reforms. The first is obviously the pillars of 2047 constitute. First is obviously legal reforms, financial sector reforms, and ease of doing business reforms. So these are the reforms that probably require to be deepened over the next couple of years. The second pillar will obviously be infrastructure. India is a country which is growing. I think we have a large population. So we will have to invest very heavily in infrastructure. So the current, the last budget, I think the Honorable Finance Minister put on the table about $130 billion on infrastructure from the government funds. So this is also likely to syndicate or attract some investments from the private sector also. So roughly we can say about $200 billion is the investment size for the current year. But if you look at our requirement, I think 2019 as part of the National Infrastructure Pipeline Task Force. I had the opportunity to also to look at what would be the requirement. So the rough prediction was that we will require about $4 to $4.5 trillion over the next 15 to 20 years. So which means that the going rate has to be at least about 250 to $300 billion every year. So there is a financing gap for infrastructure. So this financing gap has to be met through various means. All of us know that India is a capital deficit country. So therefore, obviously it means that if we can only generate about 150 to $200 billion every year internally, then I think we may have to raise the rest from various other sources, which is obviously the foreign investment. So about 150 to $200 billion need to come from abroad. So this probably is a very important task, one second pillar for 2047. The third pillar, if you may ask, is net zero at 2070. I think so. Every country is now looking at net zero in various through various timetables and methods. So India, the Honorable Prime Minister has announced 2070 as the agenda. So we will require a lot of green finance. I think green finance has now picked up. So green finance for solar energy is now commercial. I think so. While green finance for turning, hard to abate sectors like cement, steel, etc., into green, businesses is going to be very challenging. That is a very important task which probably financial institutions might have some difficulty in taking up. So that is what we call as transition finance. So you will require a lot of money for transition finance. So this net zero at 2070 presents a great opportunity in manufacturing, energy generation, in development of new technology, and so on and so forth. That will require huge amounts of money. In fact, I read a small paper published by Climate Policy Initiative just about a couple of, I think somewhere in November of last year, saying that the world will require nearly about $260 trillion, actually to turn net zero by 2050. It's a very, I think it's mind-boggling, way out of the, our telescope. So going by that logic, India will require at least about 10 to 15 or $20 trillion. I think it's all completely, the numbers are everywhere. So the short point is that we will require large amounts of capital. So the normal instruments, the normal means of raising capital may not really work. I think you may have to look at something very innovative. Both policy initiatives to support it in terms of taxation, in terms of legal support, in terms of the kind of policy cover that this various the green and the transition sectors require, and so on and so forth. Maybe things like climate taxonomy and so on and so forth. So this is another very important fundraise that probably awaits us for as part of the 2070 or 2047 agenda. The fourth pillar, if I may look at it, is manufacturing and technology. Because India is a very large country, our share of manufacturing is only about 15%, 15 to 16%. So most developed countries have at least about 20 to 25%. So therefore, I think we will have to invest more in manufacturing to become more self-reliant. So every sector is trying to do that. So when we do that, I think money has to be put on the table for technology development. India so far for the last 50, 60, 70 years has been in many parts of the economy has been completely dependent on foreign technology. I think. Let me give an example of the telecom sector from where I come from. We were passive importers of 2G, 3G, 4G, and probably only in 4G, I think the government really woke up and said, no, we will stop importing this technology. Let's develop our own technology. So today we have a 4G stack, in India 4G stack. We have an India 5G stack in various states of development, I think. So, it may not be the best of the breed, but certainly it is something which works. So every sector is trying to do that. We have had some independence in space tech, in nuclear tech, and so on and so forth. But there are many sectors which is begging for self-reliance. So I think there is a great opportunity for technology development. There are a lot of money has to be invested by the venture capital firms, angel funds, etc. in these sectors to actually spur technology development in the country. We see a lot of development. I think, in fact, I saw a news item yesterday that in 2015, it was nearly the VC investments in India was something like 15 to 20 billion dollars. This year, I think in just about 8-10 months completed in 2024-25, the number has crossed $47 billion, I think, for venture capital investments in India. So the tech sector in India is now deepened. So there is a great opportunity for venture capital investments to scale up, and probably we have a role in that. The last piece, obviously, is talent, because India is good in talent, but we can't be constantly saying that we are good. I think it's a moving target. So we need to constantly reinvest in our skills, and I see a great opportunity in GIFT City as well. So GIFT City, the International Financial Center intends to address all these verticals, I think. So reform, in the reform piece, I think we have, constantly we are rewriting a lot of our regulations. I think the advantage we had is that the government of India delegated, the parliament delegated the powers of these 16 financial sector acts to us. So our team did a good job in collaboration with all of you, I think the industry, in drafting regulations which are more or less aligned with the rest of the world, I think. So this is again a moving target. So every 3 years, I think we are on the job of constantly recalibrating as to whether we are really aligned. So this process has now started, the process of review has started in respect of many regulations. And this has to be constantly on our agenda. So therefore, I would request all of you to be our ambassadors and kind of ears and eyes to the, ears on the ground to assess what the other countries are doing to better, I think, what are those best practices that can be incorporated in our regulations. And let me assure you that I are loath to actually to issue circulars every other day, I think, which we should not be doing. So though despite that, if there are some best practices which are positive in nature, that certainly cannot wait for tomorrow. That certainly can be done, I think, even in between reviews. So therefore, please do let us know. I think we are constantly on the lookout for better ways of doing things. Similarly, I think if you look, so we have recently launched an initiative in the Business Development Department. Dr. Ripesh, Executive Director of Business Development, is here. So Mr. Asutosh Sharma, our CGM, heads a group on ease of doing business. We are trying to figure out how within IFSC and also outside IFSC, because when people come here, the touch points are so many touch points. There is the company law, there is the GST Act, there is the Stamp Act. I think there are various people they are touching, as part of the overall application process. So we need to ensure that these touch points are smooth, hassle-free, and don't pose challenges to any investor, domestic or foreign. So therefore, our task is to actually constantly look at ease of doing business. So the committee has actually put out a report, and I think we expect that to write to various agencies to actually to improve the way in which I think many of the processes are embedded in the onboarding of a client. Similarly, I think we are I've told our team to actually look at smooth. I think similarly ease of doing business studies have to be conducted on operational as well as exit of a company. Both, I think, we should both the birth, the existence, as well as the demise of an enterprise should be very smooth and very professional. That's what our aspiration is. And therefore, we will the next report I think our team will work on is on the operational and also the exit ease of doing business for companies as well. So we will work on that, and I expect the market participants also to give us ideas. The next piece obviously is the capital raise. I just mentioned the various areas: infrastructure, the green finance, transition finance, manufacturing, venture capital, technology development. So these all pose tremendous opportunities, I think. So not only for India, but for the region. So IFSCA can be a hub for all of these, for infrastructure funds, maybe for bonds, transition bonds, maybe, I don't know, bonds which sustainable linked bonds. So all these, in fact, a lot of good work has been done to actually create those markets. Today, the bond market here is taken off well, but we expect a lot of further improvements to happen. I think the bond market here should now extend to the extent that probably arrangers are here, the investors are here, the clearing happens here. I think I would expect the market institutions to actually to aggressively look at the entire piece and the entire I think the whole piece of work and see what these elements of work can be brought in here in bigger measure to IFSCA. So we will be very happy to support you and assist you in this process, because at the end of the day, we will not have done our job unless we provide a cost-efficient means or a platform for Indian corporates to raise capital for all these things which I mentioned, be it infrastructure, be it for technology or manufacturing or for green energy generation and so on and so forth. So unless we provide a world-class regime which actually enables people to raise capital in the most efficient manner compared to anywhere else in the world, then we would not have done our job. Therefore, we request all the market participants to brainstorm and see where these pain points are, where these friction points are, and suggest to us on how we may kind of architect re-architect, constantly renew and re-engineer our processes to ensure that we get there. So I will not take much more time. I think our journey is to ensure that we regulate this market in the the best possible manner to ensure that the development is orderly and sustainable. Both it has to be orderly and sustainable. That's very, very important for us, because we can't be building a house of cards, I think, so which can get blown away by the softest of the breezes that hang around the neighborhood. So therefore, we need to ensure that all of us have to ensure to build that those businesses which are resilient, businesses that will grow for a long time, businesses which can scale up and showcase for the rest of the world on how India can serve, I think, effectively. So I'll stop here, and I will hope that 2025 will be a year when all the businesses here who are already established scale up significantly. So we must look at opportunities in which you can scale up sustainably and in a very resilient manner. We will be happy to support you and assist you in this exercise. And I once again congratulate the organizers of this conference. All of you have done a fantastic job. I think this is a time for brainstorming and also networking. I think a lot more business probably will get done at tea time and lunchtime perhaps. So we expect all of you to exchange notes and share your wisdom. I think the amount of man hours of experience here will be humongous. So let's hope that that all will be put to good use in the coming year, and hope that IFSCA sees substantial progress in the current year as well. These few words, I once again thank you and welcome you all once again. Thank you. Jai Hind.
Thank you very much, sir, for the inspiring and visionary remarks and for all your support. We appreciate it. I would now like to invite Dr. V. Anantha Nageswaran, the current Chief Economic Advisor to the Government of India, to give the special address. He has taught at several business schools and institutes of management in India and in Singapore. He has co-authored various books and also is an honorary senior advisor to the International Financial Services Authority of India. Dr. V. Anantha Nageswaran would be joining us virtually. We welcome you, sir.
Yeah, can you see me?
Yes, sir.
And can you hear me as well?
Yes, sir, please. Go ahead.
Thank you very much. Good morning, everybody, ladies and gentlemen, and the honor and the chairperson of GIFT IFSC, Mr. Rajaraman, and good friend. I wish you all a very happy and healthy 2025 first. And my apologies that I'm not able to join you on this important occasion. I would very much have loved to visit GIFT IFSC, which is still pending, and to see the remarkable progress that has taken place in the last several years, particularly since my friend and the current chairperson, Mr. Rajaraman, took over. So that is something that I would like to put it down for 2025 as an important task. So it's indeed a privilege to address this distinguished gathering on a subject of immense importance: building an innovative and sustainable securities market ecosystem in GIFT IFSC. The Gujarat International Finance Tech City, that is the GIFT City, International Financial Services Center, holds the promise of transforming India into a global hub for financial services. And the securities market forms a critical pillar of this ambitious vision. In fact, this is one of the moves that is very long-term and strategic in nature, which would become more and more important and significant as India's economic size increases in the coming years, and it becomes a very important player in the global macroeconomy and global financial markets, both as a provider and as a user of financial services, and also contributing to funds flows internationally in either direction. The establishment of the GIFT IFSC is indeed a testimony to the visionary leadership of the Honorable Prime Minister Sri Narendra Modi, because he has placed a strong emphasis on positioning India as a key player in the global financial landscape, as I just now mentioned. Under his guidance, the concept of GIFT City evolved from an ambitious dream to a vibrant reality, one which is dynamic as well. With a unified regulator, the International Financial Services Center Authority, GIFT IFSC, is fast emerging as a preferred destination for global financial services institutions. This initiative reflects the government's commitment to fostering economic growth, innovation, and global integration. Let's understand GIFT IFSC, because it is indeed a game changer. It is India's first operational international financial services center, established to provide a global platform for financial transactions. It is situated in the context of India's rise as an economic power, and it represents a bold step forward, integrating the country into the global financial ecosystem. As the hub for international trade and financial services, it is designed to compete with the likes of Dubai, London, and Singapore, and aspires to become a key financial center for the region as well as the globe. GIFT IFSC offers world-class regulations along with a rare opportunity to explore innovative and experimental financial products and services, such as aircraft leasing, bullion trading, ship leasing, etc. The enabling of direct listing for companies at GIFT IFSC is expected to give further fillip to the financial ecosystem there. The government is committed to developing GIFT IFSC as a dominant gateway for channelizing global capital for sustainable and climate action related projects in India. Since its inception, GIFT IFSC has made remarkable strides in innovation and sustainability. It has already introduced a range of cutting-edge technologies and practices, including innovative trading platforms. GIFT IFSC has established advanced trading systems that provide real-time data and analytics, ensuring transparency and efficiency in the securities market. It has introduced regulatory sandboxes. The IFSCA has implemented regulatory sandboxes to encourage experimentation with innovative financial products and services in a controlled environment. It has also taken green finance initiatives. GIFT IFSC has emerged as a pioneer in green finance by promoting the issuance of green bonds and sustainability-linked financial instruments. It has also facilitated the listing and trading of infrastructure investment trust, drawing substantial interest from global and domestic investors keen on responsible investing. In digital infrastructure, GIFT IFSC has leveraged state-of-the-art digital technology, enhancing its operational capabilities, offering seamless cross-border financial services, and is indeed on its way to becoming a global reinsurance hub and a sustainable finance hub. I understand that as of 2024 September, about 4 months ago, more than 650 plus entities across banks, capital markets, insurance, fintech, aircraft leasing, ship leasing, bullion exchange, etc. have been registered with IFSCA. There is an important imperative for innovation on an ongoing basis, and it is indeed the lifeblood of any thriving financial ecosystem. In the context of GIFT IFSC, innovation should manifest itself in multiple dimensions. I will just list 4 of them. Technological innovation. Advanced technologies such as blockchain, artificial intelligence, and big data analytics have the potential to revolutionize securities trading, clearing, and settlement. By embracing such technologies, GIFT IFSC can position itself as a pioneer in the global securities market. When it comes to product innovation, GIFT IFSC has already taken significant steps in product innovation by introducing the regulatory framework for REITs, InvITs, and green bonds. Going forward, it must expand its portfolio to include sustainability-linked bonds. These products cater to a wide range of investors, including institutional and retail participants, and attract private capital for India's energy transition and climate adaptation. Regulatory innovation in this area, a dynamic and forward-looking regulatory framework is essential for fostering innovations. The IFSCA's regulatory sandboxes are a prime example of how to nurture innovation without compromising stability. That's a key element of financial system because they are prone to instability from time to time if left to regulate themselves. Such initiatives allow financial innovators to test their products in a controlled environment. When it comes to ecosystem innovation, GIFT IFSC must establish itself as a comprehensive financial ecosystem. By integrating banking, insurance, capital markets, and other financial services. Collaboration between and across these segments can lead to innovative solutions that also address market gaps while promoting operational efficiency. With respect to the sustainability imperative, As we build an innovative securities market ecosystem, sustainability must remain a core guiding principle. Sustainability goes beyond climate change and energy transition. Financial markets have a unique role to play in driving this by channeling capital towards environmentally and socially responsible initiatives. I reiterate that they span and go well beyond climate-related and energy transition-related initiatives. Here is how GIFT IFSC can lead the way in this regard. Promotion of green finance, basically green bonds and sustainability-linked financial instruments have already become integral to the securities market in GIFT IFSC. By offering favorable listing conditions and incentives for green financial products, the ecosystem has already attracted global investors who prioritize ESG criteria. Integration of ESG metrics in a meaningful way, recognizing the fact that some of these metrics may have become fashions and fads in recent times across the world, but integrating them in a meaningful way so as to enhance governance and ensuring confidence of investors in financial products is another area where GIFT City can both address innovation and sustainability together. In terms of resilient infrastructure, the physical and digital infrastructure of GIFT IFSC is indeed designed to withstand environmental risks. And in that regard, it stands as an example by itself in the way it is organized. Its energy efficient buildings and renewable energy integration are examples of sustainable development, which other financial centers in the country and across the world may also emulate. With respect to capacity building and awareness, sustainability in the securities market requires well-informed workforce and investor base. Training and educational attainments are important, and GIFT IFSC, I'm glad to note, is already collaborating with academic institutions, think tanks, and international organizations to conduct training programs, workshops, and seminars, not only on sustainable finance, but in several other areas, because ultimately the purpose of a financial center and its continued success also depends on the availability of skilled human resource. Leveraging global best practices, GIFT IFSC can, and it's already drawing inspiration from global best practices, and in fact is evolving into a source of global best practice in itself. And leading financial centers around the world offer some valuable lessons, which I don't need to elaborate because you are very familiar with those institutions and their practices, and GIFT IFSC is both a taker and giver of global best practices, and I'm very happy to note that. With respect to a strategic roadmap for GIFT IFSC, it is 5 areas come to my mind. Strengthening governance. Robust governance mechanisms are the cornerstone of any successful financial ecosystem. It must establish independent oversight bodies to monitor market activities and ensure compliance with good governance practices, because the financial system, if it results in instability from time to time, that will also have a reputational risk going forward. So financial system stability and implications for macro stability must always be in the forefront of the consciousness and the evolution of GIFT IFSC. Encouraging collaboration between regulators, market participants, and technology providers is another area to improve its strategic, is another area that is part of the strategic roadmap for GIFT IFSC, and public-private partnerships can play a significant role in creating a thriving ecosystem across public and private sector players. Enhancing market accessibility, simplifying entry barriers for foreign investors, and providing streamlined processes for market participation can also set an example for domestic capital market regulators and financial institutions in the country, apart from attracting global players to GIFT IFSC. Investing in research and development, a dedicated R&D center focused on financial innovation can propel GIFT IFSC to the forefront of technological advancements in the securities market, especially if it manages to combine innovation with market stability as the twin objectives of any approach towards innovation. The role of stakeholders, The journey towards an innovative and sustainable securities market ecosystem in GIFT IFSC requires concerted efforts from all stakeholders. With respect to the government, it's about providing policy support, infrastructure investment, and regulatory clarity. On the part of regulators, it's about developing frameworks that balance innovation with risk management. On the part of financial institutions, it's about pioneering new products, adopting sustainable practices, all within the framework of sound governance and keeping in mind the interests of investors, both institutional and retail. Technology firms, they need to offer cutting-edge solutions to enhance market efficiency while keeping one eye on cyber risk and security risks and unintended consequences. On the part of investors, they should advocate for integration of environmental and sustainability criteria and also ensuring that they act as a force for good governance with prudent risk management when it comes to investing as well. In conclusion, ladies and gentlemen, the task of building an innovative and sustainable securities market ecosystem in GIFT IFSC is a challenge, but it is a rewarding one. By embracing technological advancements, promoting sustainability, and fostering collaboration, we can position GIFT IFSC as a global leader, as a global hub for financial services. This remarkable initiative would not have been possible without the visionary leadership of the Honorable Prime Minister Shri Narendra Modi. The development of GIFT IFSC epitomizes the government's unwavering commitment to transforming India into a global economic power and establishing it as a dominant force in the global financial ecosystem with its very convenient and strategic geographic and time zone location as well. The vision of transforming GIFT IFSC into a world-class financial hub is not just an economic imperative, but a national aspiration. Let us work together to create a securities market ecosystem that drives growth and embodies the principles of innovation, inclusivity, sustainability, prudence, market, and macro stability. Thank you very much. Back to you.
We also thank you, sir. In spite of his busy schedule, he was present over here virtually, so we are grateful to him. And moving ahead, we would now like to present a memento to Mr. K. Rajaraman, sir, and would request Mr. Pradeep Rajaraman, Executive Director, to do the honors, please. Thank you very much. So, ladies and gentlemen, this concludes our inaugural session. So, we request you to join us for the tea and coffee break. We also have the stalls at the display, so please take a look over there. Also, take a fresh selfie or a photograph right at the photo booth, and do not forget to post it on our social handles. Thank you. Bye-bye.